trading based on price action, then this one indicator might just be your holy grail. Seriously, it's like having a trading butler who does all the hard work for you, identifying market structure, fair value gaps, and order blocks, so you can focus on the important stuff. All you have to do is press the buy or sell button whenever this indicator flashes a setup. It's so simple, even my dog could probably trade with it. In this video, we'll cover everything you need to know about this indicator and how you can use it to improve your trading. Trust me, you'll want to stick around for this one. Smart money concepts have taken the trading world by storm in the past year. Everybody's using them. But if you're sitting there wondering what all the hype is about, don't worry, I've got you covered. In short, smart money concepts focus on pure price action, no fancy indicators, no weird geometric patterns, just raw market structure, order blocks, imbalances, and liquidity. The idea is to trade like the big institutions do, identifying the best entry and exit points without relying on lagging indicators. Now, the problem, it takes a ton of effort, and let's be honest, most of us prefer the easy way, which is where this free indicator comes in. It automates the entire process, making it super simple for new traders to succeed. To find it, go to tradingview.com, open the Indicators tab, and search for Smart Money Concepts by LuxAlgo. Once you enable it, your chart will light up like a Christmas tree, with order blocks, structure, and liquidity zones all mapped out for you. If your chart isn't looking like a masterpiece yet, don't panic. Just go to the settings, scroll down, and turn on fair value gaps. Trust me, you want these on. I suggest extending them to 5 points, because let's face it, we all appreciate a little extra breathing room. At first glance, this indicator might seem complicated, kind of like trying to assemble IKEA furniture without the manual. But don't worry, by the end of this video, you'll know exactly how to use it to maximize your trading profit. As a special thank you for subscribing, I'm giving away a totally unique and powerful trading system that you won't find anywhere else. Grab it now, just check the link in the description. Let's talk market structure. You'll see BOS, break of structure, and CHOCH, change of character, labels popping up. These are your best friends. Think of them as traffic signals telling you when a trend is shifting. A change of character happens when the most recent swing, high or low, is broken with a candle close above or below that point. A break of structure, BOS, on the other hand, is when a second swing, high or low, is taken out, confirming a trend shift. You'll also notice different types of lines. Dashed lines indicate internal structure, basically what's happening within a larger price movement. Solid lines show swing structure, which is more significant and indicates a higher time frame shift. If all this sounds like trading jargon overload, don't worry, I promise it'll start making sense as we go. Just like the first time you tried sushi. Confusing at first, but now you can't live without it. Order blocks, the smart money zones. Now, let's move on to order blocks. These are areas where support and resistance are likely to be found. In other words, this is where the big players, institutions, and hedge funds are placing their orders. And guess what? If you know where they're trading, you can trade alongside them. There are two types of order blocks: swing order blocks, higher time frame, more significant, or internal order blocks, smaller moves inside the swing structure. Both are valuable, but swing order blocks are like premium Wagyu steak, higher quality and more reliable. Fair value gaps, the price magnets. If you've been in the trading space for a while, you've probably heard of fair value gaps. They are crucial. A fair value gap is an imbalance on the chart formed by three candlesticks. They appear as green boxes, bullish, or red boxes, bearish, and act as magnets for price. Simply put, price tends to fill the gap before continuing its trend. It's like a pothole on the road. At some point, it's going to get filled in. You can use fair value gaps to enter trades after a valid setup has formed, giving you an edge over traders who rely solely on indicators that lag behind. Equal highs and lows, the liquidity zones. Turning on equal highs and lows in the settings will highlight areas where liquidity is resting. What does that mean? These are spots where traders have placed their stop losses, and the market loves to hunt these levels before reversing. So if you see equal highs or lows, expect the market to make a move towards them before a potential shift. MTF levels, multi-time frame confidence. Another killer feature of this indicator is MTF levels, short for multi-time frame levels. You can turn these on and see daily, weekly, and monthly highs and lows. These zones act as major liquidity areas and can provide excellent trading opportunities. A general rule of thumb: the bigger the time frame, the less prone to manipulation the level is, which means higher confidence in those zones. Premium and discount zones, buy low, sell high. Finally, we have premium and discount zones. This feature marks the local range of the market and divides it at the equilibrium point, basically the midpoint between expensive and cheap. If you want higher probability trades, focus on selling at premium levels and buying at discount levels. Think of it like shopping for stocks at a Black Friday sale, except this time you actually get something of value. Real trade examples. Now that you understand what this indicator does, let's put it to work. Example 1, Ethereum trade. Setup. ETH has been ranging for a while. The indicator highlights higher highs and higher lows. A change of character, CHOCH, followed by a break of structure, BOS, appears. A fair value gap aligns with a previous high, strong confluence. We enter long at the fair value gap's midpoint with a 1 to 2 or 1 to 3 risk-reward ratio. Example 2, order block-based entry. We identify an uptrend with higher highs and higher lows. A liquidity grab occurs. Smart money hunting stops. A break of structure appears right above an order block. Price retraces to the order block, offering a high probability entry. Entry is placed with stop loss below the most recent swing low and a target at the local high. By now, you should have a solid understanding of how to use this indicator. If you're still confused, don't worry. Just rewatch the video until it clicks. I appreciate every single subscriber, so as a way to give back, I'm giving you access to an exclusive trading system that can help take your trading to the next level. The download link is in the description. Go check it out. If you found this helpful, make sure to smash the like button, subscribe, and share this with someone who needs to stop relying on outdated indicators. Happy trading, and remember, trade smart,